All right, good afternoon, everybody. It's a little weird this week because usually we do this on Monday mornings, and I'm saying good morning to all of you. But it is now Tuesday after the close, and I just had some projects I was working on for a few of my clients this weekend, so I just wasn't able to get to it. But frankly, the markets have been consolidating, and there's really nothing pressing that couldn't wait till today. And that brings me to kind of one of the points I wanted to talk about when we talked about how 2 weeks ago the market was going to rally because the S&P was the most oversold it had been in 7 years. So here's my point. There's maybe, I've been doing this for a long time, for 20 some odd years. There is maybe two or three or maybe four times in a year where there's a really, really, really obvious trade. And 2 weeks ago was one of them. Okay. So anytime something gets oversold or overbought, more so than it's been in 7 or 8 years, the market's going to revert, right? If the market doesn't revert, then it's probably just going to become obsolete, and the only thing that's going to be worth anything is guns and vitamins and bottled water. Everyone says, "Oh, you got to get gold for when the world comes to an end," but you know what's going to be more valuable than gold is Flintstones vitamins, because what if your kid is suffering from vitamin deficiencies? You can't give them gold, but you can give them some vitamins. But anyway, all right, that being said, this week I think we are going to probably consolidate. I think there's a lot of resistance just overhead in some of these various indices, and we're going to take a look at that. But something else to pay attention to, though, is there's been a big drop in interest rates, and 98% of the time when the idiots on television are talking about whatever, trade wars or this or that or the other thing, it's just irrelevant. That's not why the market moves. But interest rates do move the market. So something we need to pay attention to. So let me just move forward here, and I'm going to show you what I'm talking about with these resistance levels. All right, so just to kind of go through our philosophy here, we know that in markets there are certain price levels that are more significant than others with regards to the amount of supply and demand that exists at them. And we also know that markets are always doing one of three things. Their prices are either going up, going down, or staying the same. So if you can have an understanding and awareness of these levels and trends, it's going to be able to help you build a profitable trading strategy. I suggest to all my clients and my friends that things like Gann theory and Elliott wave and harmonic charts are in the realm of Bigfoot and UFOs. They're fun to talk about, but they're just not credible. I can tell you that in my 20 years of being an institutional hedge fund trader, I never once ever heard a successful manager, or even an unsuccessful manager for that point, for that fact, or for that matter, that's what I'm trying to say, for that matter, talking about Gann theory or harmonic charts. So, though I have heard some of them talk about Bigfoot and UFOs. This is just the overview. You can print this out off my website. And obviously you know where my website is, because if you didn't, you want to be listening to this. All right, so this is why I'm thinking we're going to have a period of consolidation, because this, as you know, if you've been listening to me, this 260 level has been very important. It was important back here. I mean, we've literally been talking about this level for a year. Okay, that's where it rebounded. You can tell it was oversold, and we broke through. So this is an important level. I think we're going to see consolidation. In other words, I think the market's going to go like this, as opposed to going up. I don't think it's going to go down. And believe me, I'm not talking about the next 6 months. I'm talking about maybe the next week or two. So I'm seeing consolidation because we're running into resistance. This shows that we're kind of neutral. So the last time I talked with you all, I think it was Christmas Eve or somewhere around Christmas, I put out a big bullish call, and I bought some of those, what the hell are they, the UPROs, and it was up 15% in a few days. Yay me. All right, so this is what I was talking about, and this is what we talked about last week or 2 weeks ago. You can see how oversold the market was. This is the most oversold it has been or was since 2011. So, I mean, as long as markets continue to function, things like this are major buying or selling opportunities. So I think I bought those UPROs on Wednesday at 30, and I sold them the following Tuesday at 35, I think. But anyway, again, one of the biggest problems that most traders have is they feel like they always need to be in the market. You should, if markets are neutral, like I think they are now, it's like, hey, go to the beach, hang out. Don't feel like you always need to be doing something. You just have to wait for a good opportunity to come along. And I know it's easier said than done, but again, if you listen to me, you know that we talk a lot about psychology and how the most important thing about being a successful investor or trader is understanding that humans have not evolved to manage money or to trade. And if you're going to take a gain or a loss, it's always going to invoke emotions. If you're going to take a gain, you're taking the gain because you're afraid you're going to lose the gain. If you're going to take a loss, you're afraid because you don't want to take a loss. So that makes people do things, close out of positions too quickly. Yes, Lila, what can I help you with?
I need you to check my essays.
All right, let me finish this call, okay? That everyone was my daughter Lila, who I have to say I'm very proud of. She's doing very good in school now. She takes after her mother and has a very difficult time with math. But anyway, she's doing good. So she wanted to show me her test. All right, so anyway, enough of that. Let's move on. Oh, is momentum spelled wrong here? I gotta check this out. Momentum. Maybe it is. All right, so here's the first example of what you can see where I'm talking about how there's a lot of resistance overhead. So the XLKs, they are trading sideways, consolidating after breaking this downtrend. I think there's gonna be some resistance around the 6350 level because it was support here and support here and support here, and then it was support here. So this is what I mean, that I don't see a big move upwards anytime soon because we have all this resistance overhead, and if you look down here, we're neutral. This is the relative strength indicator, which is basically a momentum indicator. And all people try to make momentum indicators more complicated than they should be. All they're really doing is telling you how far away a price was or price is from X many days ago. I use the RSI because it's just the easiest. People use, moving average, convergence, divergence, and stochastics, and this and that, and the other thing. But that's the mantra that we preach here, is that when a market gets to an important level and it's overbought or oversold, it will revert. When a market gets to an important level and it consolidates, then there's a chance that it could move through that level. Okay, here we go. So anyway, we got down to an important level. We were oversold. We rebounded. So going forward, I'm looking for resistance around here, 86.50. I'm looking for support around here, 82.50. This consumer discretionary was interesting because I expected to see some resistance around the 98.50 level because it was resistance back here, but we blew right through it. And when something like this happens, it kind of negates the importance of the level, so I won't be paying as much attention to that level going forward. But you can see here how levels are important, right? I mean, where did this market find support? At the same level that was the top back here for like 6 months in 2017. And it's unfortunate that so-called technical analysis has such a bad name or reputation. And I can completely understand why, because so many of the people that do it are complete idiots and they just have no clue. And they just try to magically find patterns without actually having any understanding of what these patterns are. These patterns if understood correctly, they're indicative of supply and demand dynamics that are going on in the market. They're a visual illustration of supply and demand dynamics. For example, right, this is an illustration of a supply and demand dynamic. Back here it was supply, now it becomes demand, right? Pretty simple. Okay, industrials is another thing that's consolidating, neutral now. Around current levels, I don't really see any clear levels of support or demand. Longer term, I'm going to be looking at the 62 level for support. I'm going to be looking at the 71 level for resistance. 62 is important because, and we had a feeling we would find support here because it's right where the rally started after the election. And levels that rallies or sell-offs start from are important if the market or when the market gets back there again. And you might say, well, gee, Mark, well, talking about 62, it went down to 60. Well, first, find a fundamental analyst that can call it, target that closely. And second, as we know, it's much harder to call bottoms exactly the tops because bottoms are driven by fear. Selling is driven by fear, whereas buying is driven by hope. And fear is a much more powerful emotion for humans. So you will always see bottoms that are more choppy than tops. For instance, look at this top, right? Early, I don't know, what is this? Late 2017, and then last October. I mean, come on, like within half a point of the 80 level. And if you go back on my blog, well, we talked about how we were going to run into resistance here. But again, that's one of the things that we always talk about. If markets were efficient, they would not go down faster than they go up. And markets go down faster than they go up because fear is more powerful than hope. All right, here's the consumer staples. I'm going to be looking for resistance here around 52 because that's where this bottom was here back in October. As we talked about, this is 50 level is very important. We came off of there. So consolidating, I'm looking for resistance at 52. I'm looking for support at 50. Pretty simple. And this longer term chart here illustrates the importance of the 50 level. No academic or random walk person could ever explain this. How is it that the XLPs have the exact same valuation here, as they did here, and as they did back here? You just can't explain it. The interest rates are different, the economy is different, but as us market equilibrium analysts know, that markets are driven by trends and levels most of the time. So here you can see how important the 50 level is. Okay, energy broke its downtrend. We suspected that was going to happen because we saw this capitulation volume. So it's trending higher, a little bit of consolidation. I'm going to be looking for resistance around the 6650 level again because it was the bottom here and it was resistance throughout here. And this longer term chart shows, is a clear illustration of how certain levels are more important than others. Another reason why we thought we were at a bottom a few weeks ago is because they were trading around the same levels that they were when they found a bottom in early 2016. And then you could see too, look how clearly defined the 78 level is for resistance. So in the future, if we get back up to 78, we're going to see resistance there. And I suppose we will get back up there eventually, unless a meteorite hits Washington or society collapses. But I just like to show this chart because it's an illustration of how longer term levels, or how levels are important even in the long term. This is what, almost a 3-year difference, and found support at the same level. All right, so then materials broke their downtrend. Now they're uptrending. There's really no clear levels here, and I don't trade these things because they're so boring. And then here's utilities. As expected, we found support around 52. The reason why that was expected is because this level was important back here, was important through here, and was important back here. So it's really not magic. Just look for levels that are important. The 52 level is obviously important. If we break, I'm going to be looking at this 49 level, which was the bottom all the way out here. All right, and that's it, everybody. A pretty simple one this week. So just remember to take away from this call, there's a lot going on in interest rates. Interest rates have fallen dramatically. That could be bullish for the market. However, I think we're going to consolidate for a while because there's a lot of resistance just overhead in some of these major sectors. And then the most important thing, I guess, is to remember that it's not a bad idea to stay out of the markets. Once or twice a year, or maybe 3 or 4 times a year, a very clear trade comes out, like we talked about with the SPYs, because we were at the most oversold we've been in a decade. So that was a chance to go in there and have a good low risk trading opportunity. But don't feel like you always got to be doing something. If you can't come up with any ideas, just take the day off, right? Go to the beach or watch TV or watch horrible movies on cable. All right, so that's it. Everybody have a good week. We're going to try to get back on Monday and get back into our typical schedule. Thanks, everybody. Happy trading.